Chairman Peck.
Thank you, Madam Chairman. How much introduction do you want? I've got 65 years worth of introducing I can do.
That is,
Just brief? Okay. Virgil
I don't
Peck,
know, when you tell a legislator to be brief, that's dangerous, and so.
Yeah, absolutely. But anyway, Virgil Peck's in District 15, which is 5 counties in southeast Kansas: Neosho County, Lebec County, Elk County, Chautauqua County, my home county of Montgomery. County seat is Independence, to give you an idea if you're geographically challenged, right on the Oklahoma state line. I served in the House 12 years. This is my 5th year in the Senate, and having the privilege to serve as Vice Chair of the Tax Committee is one of the honors that I certainly tell everyone about when I'm back home. So thank you, Madam Chairman.
Thank you. And the ranking?
Thank you, Madam Chair. It's an honor to be here, honor to be the ranking on this committee. I was on this committee for my first term, my first 4 years. Ethan Corson represents Senate District 7, which is in Northeast Johnson County, and proud to be part of this really hardworking team. So thank you, Madam Chair.
Thank you. Senator Peterson.
Senator Mike Peterson, Southern Sedgwick County.
Senator Tim Schallenberg, 13th District, Cherokee, Crawford, and Bourbon County. That is extreme southeast Kansas. We border all three of those counties border Missouri. So we have that to deal with, and the Cherokee County borders Oklahoma. So we have friends all around.
Which makes a difference when you're working tax. Thank you. Senator Klepp.
Hi, Senator Klemp, District 5, Leavenworth and Lansing, Wyandotte County, and Basehor and Piper are the main areas, and we do border Missouri.
Senator Starnes.
Yes, Senator Brad Starnes from District 22, which is all of Riley County, so Manhattan, K-State. Some of veterans with Fort Riley being close as well. A unique perspective as far as a district. 3 higher learning centers: K-State, Manhattan Area Technical College, Manhattan Christian College, high schools 1 through 6A, as well as the military and all of ag that's there as well. So thank you.
Senator Owens.
Good morning. Thank you, Madam Chair. Stephen Owens. I come to you from the House. Served 6 years in the House, and I was recently elected to the 31st Senate District, replacing Senator McGinn. So that includes all of Harvey County, so Newton and Heston, where I reside, as well as northern Sedgwick County. So I'm excited to be part of the Tax Committee and look forward to working with each of you.
Thank you. Well, welcome, committee. We'll let Senator Ware get settled, but I'm Karen Tyson, the Senate 12th District. I'm glad to be here with tax again. Over 50% of our committee is new. So there will be quite a bit of review to try to help bring everybody up to speed as much as possible, but I do recommend you will have to do some work outside of the committee room. So Senator Ware, would you like to introduce yourself?
Of course. Thank you, Madam Chair. Senator Mary Ware from Wichita, District 25. This is my first time on tax. So not new to tax, because you can't be in the legislature and not have some background in tax. So looking forward to learning a lot. Thanks.
Thank you. Well, welcome. And I'd like to have the staff introduce themselves. Our committee assistant, John, do you want to?
Good morning, everybody. I'm John Gaunt. This is my 4th year in tax, and it's a pleasure to work with you guys, and I look forward to a good session.
Brandon?
I'm Braden Humphrey with the Audiovisual Department, and this is my 1st year in tax, so happy to be here.
Thank you, Braden. I apologize. I said Brandon. So, and Pam is my office assistant downstairs if you guys need anything. You guys, we couldn't do it without staff, committee assistants, office, and especially the revisers and research. Amelia?
Good morning. My name is Amelia Kovar-Donahue, and I am an assistant reviser. This is my 7th session with the Tax Committee. I'm also staffing the Commerce Committee this year, as well as House Tax.
My name is Eddie Pinner with Legislative Research. This is my 12th session with the legislature. All 12 of those on at least one of the two House tax committees. This is my 11th year in a row staffing this committee.
Eric Adele with Legislative Research. This is my 4th session with the legislature, and I also staff House Tax and Senate Commerce. This is my first session with Senate Tax.
Thank you, Madam Chair. Adam Siebers with the Revisor's Office. I'll be backing up Amelia for Senate Tax. I do tax and transportation. This is my 13th year.
Well, thank you, guys. Let's go ahead and hit the ground running. We're going to start out committee. We did have a change of schedule this week. I want you to note that we will not be meeting tomorrow. We will pick up those presentations on other days. We'll sprinkle them in as we can. We will have a hearing on constitutional amendment Thursday. That number has not been assigned yet, but I've been assured we will have that number before we meet on Thursday. We're going to start today with presentations from, actually, I'll start with bill request. So Eric, welcome to the Tax Committee.
Good morning, Madam Chair, members of the committee. My name is Eric Turk. I'm the Director of Government Affairs for the Kansas Department of Insurance. We have 2 bills for introduction this morning. The first is RS 0116, which concerns reducing the state premium tax. And
let's take them one at a time. Okay.
Sure, absolutely.
Thank you. Are there any questions on that bill? Is there any objection to making the bill request? Seeing none, we'll make the request.
Thank you, Madam Chair. And the second one is RS 0134, and this concerns the creation of insurance savings accounts.
Thank you, Eric. Committee, any questions? Any objection? Seeing none, we'll make the request. Thank you. Committee, I do have a bill request. It is a transportation bill, but I am going to make it in this committee, and it is a license plate for Hunters Nation. Anybody have any questions? Any objection to the request? Seeing none, we'll make the bill request. Okay, committee, we'll go ahead and Eddie, would you mind giving the presentation? And we will be drinking from a fire hose on this presentation.
We're going to see how much Kansas tax law we can get through in 45 minutes. You should have in front of you, I believe, 4 documents that our office provided. The first of those is the consensus revenue estimate long memo from this past fall. The second of those is a document that details recent historic receipts and expectations, and also includes some additional information for recently enacted major tax bills. The third of those is the updated state general fund receipts through the month of December of this year. And then the final one is our current supplement to Kansas Tax Facts, the 2024 supplement. There is a correction page to that supplement that is attached to the back of it. And so for the first decent chunk of this, we'll talk our current expectations for state general fund receipts, some of the bills that are impacting those, and then the status of those receipts. And then about 2/3 of the way through, we'll pivot to Kansas state and local taxes more broadly. So the long memo is in front of you. It's about 10 pages long. This includes both our receipt forecast and our revenue forecast for the current year. For people who are new to the legislature, the state of Kansas uses a consensus process for its state general fund revenue estimates. What that means is that the Legislative Research Department and the governor's division of the budget get together twice a year to jointly estimate those revenues. At the federal level, it's not uncommon for the Congressional Budget Office and the President's Office of Management and Budget to have separate revenue estimates, and it makes it a little bit disjointed at the federal level because they're working upon different estimates and the different consequences of policies. There are other states and localities that use separate estimates at the legislative level and executive level. Kansas has used joint or consensus estimates since at least 1975, when the current process was codified, and actually for some years prior to that as well. But it's just not as well documented prior to 1975. And so essentially what the statute that provides for these consensus revenue estimates indicates is that the Director of Legislative Research and the Director of the Budget shall agree by December 4th and by April 20th to revenue estimates for the current fiscal year and one following fiscal year. Of course, it's not just one simple meeting where those two individuals say, yes, these are the numbers, we agree upon those. There's kind of a whole battery of meetings in the lead up to those two dates. And while the fall date is December 4th, we typically arrive at those estimates in mid-ish November. There's not actually a lot of meaningful revenue information that takes place between November 10th and December 4th. The spring date is April 20th, and there actually is a lot of meaningful revenue information that happens in mid-April, as that is right at the height of tax filing season. And so we do typically have those meetings as close to April 20th as possible. This year, with April 20th falling on a Sunday and it being Easter Sunday, we're actually going to meet to finalize those estimates on Thursday, April 17th. So that's when you can all look forward to getting the new revenue estimates this spring. But on the day of the estimates themselves, we publish what we refer to as the short memo. That's one page of text that just summarizes the exact numbers that were changed, and then a couple of pages of tables detailing the revised estimates. About a week or so later, we publish what we refer to as the long memo, and that is what's in front of you today, and that includes the detailed economic forecast that goes into those estimates, as well as, once again, the same revenue estimate. And the long memo also does include a table that details the historic accuracy or inaccuracy, depending upon your perspective, of those estimates. So today I'll primarily be speaking from the revenue estimate itself, which is made up on tables 1 and 2 at the back of your packet. I will briefly comment upon the economic forecast as we get to the end of it, just to give you a sense of how that is feeding into those revenue estimates. And so table 1 compares the actual receipts for fiscal year 2024 to the newly revised estimate for fiscal year 2025 and the newly initial estimate or the new initial estimate for fiscal year 2026. You can see the bottom line total for fiscal year 2024 was $10.1 billion in total receipts. 10.0 billion of that was in tax receipts. We did have 135 million of non-tax receipts to the state general fund. For fiscal year 2025, the revised estimate is 9.73 billion of total SGF receipts and 9.65 billion of total tax receipts. In terms of major changes year over year, you can see that individual income taxes, we are forecasting a 4.5% decline, a 4.9% decline to corporation income taxes, a 5.5% decline to financial institutions taxes, a 3.9% decline to retail sales taxes, 3.3% increase to compensating use taxes, and then kind of everything else is relatively speaking smaller potatoes, but you can see a 2.6% decline to kind of the other excise taxes and a 1.0% increase to the all other taxes for fiscal year 2025 relative to 2024. Most of those declines, actually probably all of those declines, are attributable to tax policy changes that have been enacted by either the 2022 or 2024 legislature, and we'll actually talk about those more specifically on the second attachment. So I'm not going to get into those in too much detail at this point. For fiscal year 2026, you can see that we are forecasting an increase of 1.2% to total receipts up to $9.85 billion. And tax receipts, we're forecasting an increase of 2.2% up to $9.86 billion. That doesn't include increases of 4.7% for individual income taxes, a smaller increase of 0.7% for corporation income taxes, and then a continued decline of 1.0% to sales taxes, but continued growth in compensating use taxes of 3.4%. On table 2, you can see the changes that we actually made to the 2025 estimates. This is something that is, of course, of a lot of interest right at the time of the meeting, but it does generally become of less interest as we get more removed from the meeting. But you can see that we did revise downwards the estimates for fiscal year 2025 by $59.8 million, or 0.6%. The tax estimate was revised downwards by $72.2 million, or 0.7%. More than 100% of that downward revision came from income taxes, and specifically from corporation income taxes, which were revised downwards by $211.5 million. Individual income taxes were revised upwards by $113.8 million. We had more modest upward revisions in sales and use taxes of $47.1 million. Both other excise taxes and other taxes were revised downwards by a combined $20.4 million. We did revise our expectations for the non-tax receipts upwards by $12.4 million. And so with that, I'll just kind of highlight the economic forecast that we had at the time. We did modestly reduce the state's economic forecast when we convened in November. Both inflation expectations and our expectations for real economic output growth were reduced downwards. Inflation by an average of 0.3% for the 3 relevant calendar years that were a part of this estimate, and real growth expectations reduced downwards by an average of 0.1% across those 3 relevant calendar years. So nominal Kansas gross state product, which is kind of typically the single most important driving variable for state receipts, was revised downwards from 5.4% to 4.7% in our expectations for calendar year 2024, from 4.7% to 4.4% in calendar year 2025, and from 4.4% to 4.2% in calendar year 2026. All 3 of those calendar years, of course, impact the state receipts for the relevant forecast period. And so with that, I would stand for questions on the consensus revenue estimates specifically. But if your questions are oriented towards, well, why is this going down in 25, then I'm probably going to punt on those until I touch on the next document.
Any questions, committee? Thanks, Eddie.
Okay. So the next document is a single-page table that you have in front of you that is labeled State General Fund Receipt and Selected Tax Bill Information. And for selected tax bills, I used kind of 2 thresholds. One of those is, was it enacted within the last 4 years, so by the most recently elected Senate? And then the second one was, did any single year of the bill's combined total fiscal impact exceed $100 million? And there's one caveat to that I'll get to at the end. And so you can see that our State General Fund receipts grew from $7.4 billion in 2019 up to an expectation of $9.8 billion in 2026. However, in this time frame especially, but this can be true at any time, State General Fund receipts may not tell a very useful story for this committee. And that's because sometimes there are non-tax policy decisions that are made in those receipts. The substantial extraordinary transfers that the state made to the Capers Trust Fund and to the Budget Stabilization Fund or Rainy Day Fund during fiscal years 2022 and 2023 show up as SGF receipt issues because they're transfers out of the State General Fund to those 2 specific funds. And so you can see in 2022 and 2023, there's a decided disjoint in the relationship between SGF receipts and SGF tax receipts because of the transfers out of those funds. And so looking at SGF tax receipts, you can see that we had $7.5 billion in 2019. In 2020, that dropped down to $7.0 billion. Part of that was the initial impact of the onset of the pandemic, but most of that decline was actually due to the delays in tax filing deadlines that were enacted in the spring of 2020. You might recall that at the federal level, the tax filing deadline was pushed from April 15th to July 15th. We followed that at the state level. We also had a delay of one of the estimated payment deadlines at that point in time. And so a lot of receipts were shifted from state fiscal year 2020 into state fiscal year 2021 because of the fact that the state's fiscal year ends on June 30th. And so those deadlines were shifted across fiscal years. And so you can see a really dramatic increase in fiscal year 2021 where state general fund tax receipts bounced up to $8.9 billion. But a lot of that one-time increase was due to the shift. However, the actual volume of state tax receipts continued to persist into 2022, albeit with a more modest growth rate. As you can see that we had $9.8 billion in tax receipts then, climbing to $10.2 billion in 2023. Those did drop off to $10.1 billion in 2024. That was partially attributable to tax policy and also partially attributable, well, also to tax policy, but not necessarily to a tax reduction legislation. In 2022, we enacted the SALT Parity Act. That stands for, SALT in that case stands for State and Local Taxation. This was in response to the federal government's limitation on the amount of state and local taxes that are permitted to be claimed as itemized deductions by individuals. The state developed a tax approach that is utilized by other states as well to kind of account for that and allow taxpayers to deduct more of their state and local taxes by having those be paid at the entity level for certain businesses. And so we created kind of a new tax system there that had two impacts. One, it shifted receipts from individual income taxes to corporation income taxes, which aren't particularly relevant for this analysis. But the other thing it did is that it accelerated tax receipts, because now those are paid at the estimated point with the corporation estimated payments, whereas previously many of those taxes were paid when taxpayers filed their tax returns in April. And so because of that, we accelerated some of those receipts. Taxpayers who typically made a balance due payment in conjunction with their April filing were suddenly entitled to a refund because of the fact that they had already paid those taxes. Since a lot of those were taxpayers who had previously never claimed a refund, and many of those refunds were relatively large, the Department of Revenue does a special review in that circumstance to make sure that there's not a tax fraud issue at play there. And so some of those refunds actually got pushed into the following fiscal year, which is what resulted in part of that reduction in receipts from 2023 to 2024, is that refunds went out in 2024 that typically would have gone out in 2023. We do have a continued decline in receipts, as I previously mentioned, down to $9.65 billion in 2025 before those bounce back to 2026. And so you might be wondering, well, why is there a decline in receipts there? And the reason for that is this section that I have below that highlights these kind of major tax bills and their state general fund receipt impacts. You can see that using this criteria, there were 5 tax bills that were highlighted from the previous 4 years of legislative work. There is a 5th bill that technically meets this criteria, but it doesn't meet it within this time frame. And so I'll speak to that more as we get to the footnotes. But these 5 tax bills, 2021 Senate Bill 50, included decoupling from various federal tax provisions, kind of a follow-on bill to the 2017 federal tax legislation. 2022 HB 2106, which of course was the food sales tax bill. 2022 HB 2239, which was sort of a taxation omnibus bill. None of the individual provisions of that bill themselves would have exceeded $100 million or even come close to it. But taken in the aggregate, they did include that. The largest single piece of that bill was the increase in the exemption from the statewide school finance 20 mil levy from $20,000 up to $40,000. That had a fiscal impact in between $40 and $50 million. That bill did also include a number of additional provisions. The tax freeze style residential property tax relief program, certain tax credits for contributions to technical and community colleges, short line railroad infrastructure expenditures tax credit, a teacher classroom supplies tax credit, a provision providing for sales tax exemption for certain disaster destroyed agricultural fencing. There is aviation tax credits, an extension of the state's rural opportunity zones program, and then a few other smaller pieces as well. But all of those kind of totaled together did get that bill across that $100 million threshold. The following bill there is 2022 Senate Bill 347, which is, of course, is the apex legislation. When that bill was enacted, it doesn't actually show up with any specific fiscal note because it was still, of course, dependent upon the state successfully entering into an apex agreement with a qualified company. The state did that with Panasonic. That construction is, of course, well underway. If you drive K10, you can see the cranes off to the south. That included 2 major revenue implicating pieces. One of those is the investment tax credit for Panasonic itself. And of course, the other is the corporation income tax rate reduction that is applicable to all Kansas corporations. And so you can see that by the time those are fully implemented, it does result in that bill reducing state receipts by more than $100 million that we anticipate in 2026, and we actually do anticipate that increasing kind of one more time in fiscal year 2027, at which point it would level off for a few years and then start to decline in its impact by the time we reach fiscal 2030, as Panasonic will have used up more of those investment tax credits. Excuse me, 2031, I believe, is when it's actually going to begin to drop off. And then the final tax bill that is included here is the special session tax bill from just last summer that, of course, reduced state general fund receipts by $416.3 million in 2025 and $327.4 million in 2026. The decline year over year of that fiscal impact is due to the retroactivity of that bill. The first year includes all of tax year 2024 and a portion of tax year 2025, whereas every year after that would include a portion of 25 and a portion of 26, portion of 26 and a portion of 27. And so the reason that the first year is bigger is because the legislature reached back to January 1 in enacting that legislation. And so all of that, you can see that the kind of bottom line total for those 5 tax bills, the revenue impact to the state general fund is increasing from $101 million in 22 to $230 million in 23, $434 million in 24, up to $1,086 million in 25, and then $1,137 million in 24. Just for informational purposes only, I did include a line that detailed what the tax receipts would have been kind of in this contemplation, but for these major tax bills. I also did include the property tax pieces of HB 2239 and Senate Bill 1. They don't actually show up as state general fund revenue impacts, but rather as expenditure impacts. In terms of revenue impacts, they reduce receipts to the state school district finance fund, which is where the revenues from the statewide 20 mil property tax levy are deposited. The function of the school finance formula results in increased state general fund expenditures when the receipts to that fund are reduced. So a couple of things I do want to highlight is, of course, the 2025 and 2026 number here are estimates. I also do want to highlight that the cells that are highlighted in yellow for you are not the official fiscal notes, just because in those cases the bills didn't have a fiscal note or didn't have a fiscal note extending out that far, but rather those represent KLRD internal extensions or projections of those fiscal notes. That being said, I doubt that the Department of Revenue or the Division of the Budget would quibble too much with these numbers. These are pretty close to the way those fiscal notes were trending. And then the other thing I do want to highlight for you is another 2022 piece of legislation that was enacted that does kind of technically meet the parameters that I used to generate this list, but it doesn't do so in the relevant time frame. And that is HB 2237. That bill contained certain housing and historic structure tax credits and also a few other items. Eventually, that bill's fiscal impact will exceed $100 million per year, but it won't exceed that level within the relevant time frame. The kind of single biggest piece of that bill was the Kansas Affordable Housing Tax Credit. The way that tax credit works is that the investment in the housing projects is made up front in exchange for the tax credit, but the tax credit itself can't be claimed until those housing projects are actually online. Once they're online, it is claimed over a 10-year period. And so each year's investment kind of starts to come online about 2 years and then more fully 3 years later. And then it's kind of staggered out over 10 years from there. And so the impact of that provision will grow over time for about 10 years, at which time it will be more or less leveled off, depending upon the actual allocation and utilization of those credits. And so with this point, it's probably a good time to pause and stand for questions on this document and any of these bills specifically.
Committee, any questions? Senator Ware.
Thank you, Madam Chair. On your list of the heavy hitters of the bills that, had the biggest impact, if this were a complete list, I'm wondering what might be roughly the amount if we'd had all the smaller amounts added up too.
That's a great question. Off the top of my head, I'm hesitant to purely speculate. It would obviously be larger, but none of those, even summed together, I don't think those smaller ones certainly wouldn't be as large as the food sales tax bill or the special session Senate Bill 1. They might be, when summed together, more akin to any of the individual larger bills.
So all the smaller ones might add up to 100?
It wouldn't surprise me if those smaller ones did add up to something along the lines of $100 million.
Okay, thank you.
Over that 4-year period.
Senator Schallenberger.
Thank you. Thank you, Madam Chair. Thank you for all you've done for Kansas, helping with what all we have done for Kansas or to it. I have two questions. One on back on your first one, table 1. I think I know the answer, but I want to make sure that I know it. Compensating use tax. Is that where the revenue from Amazon and all that is?
Yeah, that's essentially taxes, any transactions that would be subject to the sales tax, but the transaction itself isn't kind of finally consummated in the state of Kansas. So it's basically online. It's by and large online transactions. There are other non-online transactions that fall into that as well.
So as we're looking at retail sales tax going down, we're seeing compensating use tax going up. It's because we're not going to Sears anymore.
Yeah, that's the single largest driver of that growth is the fact that the economy is, especially the goods purchasing economy, is transitioning towards more online sales. That being said, the decline in retail sales itself is more attributable to the increased implementation of the food sales tax reduction. That's going to be more level in normal times.
And one more if I can. So on the last schedule of the taxes, under the property tax part, in essence, what we did is the legislature alleviated some property tax for the people, but we paid for that out of the general fund.
Exactly.
So we just shifted it from local property taxpayers to state income and sales taxpayers.
Yeah, absolutely. That policy doesn't do anything to reduce the cost of school finance or the amount of funds that go towards school finance. It just changes the revenue source from property taxes, specifically residential property taxes, since that exemption only applies to residential property, over to all of the taxes that make up the state general fund.
And in essence, and I'll shut up after this, you'll have a lot of questions from me over the year. So in essence, anything we do with property tax, since the state doesn't receive but a little bit of it, will be a shift. It won't be we're not making government smaller, we're just paying for it out of a different pocket. Unless we decide to do something different.
Yeah, that's certainly true as it relates to the 20 mills specifically. Obviously, the 1.5 mills, the state does expend those funds. It's not a kind of pass through a aid to local units of government formula. So if there were revenue reductions to the 1.5 mills, those would either be a reduction in expenditures or the state, of course, the committee could do the same thing and replace those with a revenue shift.
Mm-hmm.
And just for the committee, just a reminder, we will be having a hearing on the 1.5 mil that the state collects on Tuesday, the 21st of January. Committee, any other questions? Senator Peck.
Thank you, Madam Chairman. On the single sheet, Session 2022, Senate Bill 347, Apex. Fiscal year 2024 is behind us. It's in the books. You've got $30 million. It's interesting, generally, we don't find anything on the even amount. It's going to be 30.1, 0.2, et cetera. So I'm going to ask a few questions and let you answer. So is 30 million the amount that is exact for Apex, for Panasonic? Did we write them a check for something in 2025? Same question. When do we write a check? Because it is refundable tax credit, and it's $78 million. Do we, meaning the legislature and or Department of Research, have sort of a running total to know that this is on target or it's way off, or is that something totally revenue does, it keeps track of, or Department of Commerce? And how do we know? And then you can see it significantly balloons. But I guess just elaborate, if you don't mind, Mr. Penner, a little bit on the numbers on the Apex legislation.
Yeah, I'm happy to do so. And that's a good note that is very rounded off in the front end. The 2024 number there doesn't include any investment tax credit to Panasonic. As of the end of 2024, no such credit had been claimed, and the state hadn't written a check. We anticipate that beginning in 2025. Of course, that credit is refundable, but of course, Panasonic's corporate tax return for the state of Kansas is confidential. So in terms of what fraction of that will come in the form of reduced tax liability for Panasonic as opposed to the state writing a check to Panasonic, that's confidential and would always be confidential, kind of the flip side of whether or not that's a check written or just reduced tax liability. So that $30 million in 2024 is actually attributable to and that's an estimate, attributable to the 0.5% rate reduction for all Kansas corporations. And so that took effect at the beginning of tax year 2024. And so taxpayers would have begun reducing their estimated tax payments basically with the April corporate estimated tax payment last year. And then they would have continued to have reduced corporate estimated payments with the June. And so that more or less represents about a half year's impact of that corporate rate reduction that's applicable to all C corporations in the state of Kansas. Now, beginning in 2025, we expect, in essence, a fully annualized impact of that rate reduction since it's been in place now since January of last year. And we also anticipate the first kind of tranche of Panasonic investment tax credits. Now, the way that agreement was written is that it's the construction of the facility, in essence, is what generates the investment tax credit, that capital investment. And it's a refundable tax credit, but each year's tax credit is divided into 5 pieces and claimed over a 5-year period. And so the expenditures, the kind of qualified expenditures that Panasonic made in their first year will be divided into 5, and they would be eligible to claim those in what amounts to state fiscal years 25, 26, 27, 28, and 29. The second year comes on the following year, and they claim those in 26, 27, 28, 29, 30. And then the final year, we anticipate the facility being constructed kind of over a 3-year period. The final year then would be 27, 28, 29, 30, and 31. And so that's why I said it should start to drop off in fiscal 30, continue to drop off in 31. And then by 32, the investment tax credit piece of Apex should kind of have all been resolved as it relates to the state's impact. Obviously, the corporate rate reduction goes on indefinitely.
So I actually have a question on that, Eddie. We're looking at substantial increases from year to year on that Apex line item. Can we extrapolate from that those increases are going to continue with?
There would be one more increase in that, probably to about that same magnitude into 2027, but then it would level off at that point for 27, 28, and 29. The first drop off would occur in 30, second drop off in 31, and then by 32, it's just the rate reduction piece.
So we're talking over 200 million for the 4th year?
I wouldn't anticipate it being over 200. I would expect it to be somewhere between 150 and 200.
Okay, and okay, just so the committee knows, that legislation did not come through this committee. In fact, 7 of the 9 senators on the tax committee did not support, especially the refundable portion on this. As the senator said, the state of Kansas will be writing this corporation a check. I do have another question. Is this just the Panasonic portion, or does it include the contractors, the suppliers portion also? So
right now, there haven't been any agreements entered into with suppliers under the Apex supplier agreement provisions. It is, of course, still something that could happen, but it hasn't happened yet. And so this doesn't include anything with suppliers because it hasn't happened yet.
Okay, thank you, and thank you for confirming, Commerce letting us know. But the reality is, if they do start with suppliers, this number could increase.
Yeah.
Okay. Senator Schallenberger.
Thank you for letting me do this again, but you've caused more questions in my mind. So because of confidentiality, we will not know, the taxpayers who are giving this credit will not know whether Panasonic gets a check or a reduction in their taxes. Does the consensus estimating group anticipate revenue because of Panasonic? I mean, if we're writing them a check, they're supposed to have done all these things to cause economic growth. Is that reflected in our revenue somewhere?
So it's in essence kind of at this point implicit into our revenue forecasts. The anticipated continued growth of the Kansas economy that we have, I should have my notes page in front of me here, that, you know, we imagine the state nominal gross state product increasing by 4.7%, 4.4%, and 4.2% the next kind of 3 years. Some fraction, and it's kind of an indeterminate fraction. We don't have a specific carve out of saying 1/10 of that 4.7% is attributable to Panasonic, but some fraction of that is attributable to that project. What fraction of that it is you could probably get 100 people with 100 different opinions on.
And so I'm sorry, this will be my last one at this point in time. So at some point in time, will this committee or Commerce or some committee get look, Panasonic's now started, and this may be a year or two away, and it really has produced growth, or it really did cost us a lot of money? Is there anticipation that we'll ever know that?
I would anticipate that the Department of Commerce will be able to provide information as it relates to the status of operations at Panasonic, including how many individuals are employed there. And of course, they'll have to be, because there are other incentive programs that are a piece of this that aren't actually captured here and don't impact the tax receipts for Panasonic, but do incentivize them to have certain employee training expenditures, if they have any employee relocation expenditures, and then also just the payroll of their employees.
So how would we get a big picture of all of those items, like the $1 million bonus for people moving in? How could we find out whether that went to one person or multiple people? It wasn't answered on the floor during debate. And all of we need the total picture of what this project is looking at for this.
Yeah, we'll follow up with the Department of Commerce as it relates to what specifics kind of can be provided now, and then also what timeline they anticipate maybe more specifics being able to be provided. And then also, I can't do it off the top of my head, but we do have built into our revenue estimate some of the net transfers out of the state general fund are going towards those funds that pay some of those other expenditures. So I can get back with you the exact amounts that we are transferring out to those funds as it relates to that expectation.
I think that would be useful for the committee and going forward on legislation. And the second part of that sunset, there's no, is there a chance of a second business qualifying?
At this point, Apex is a closed program, and the second business, the agreement with Integra did not come to fruition as an Apex project. So absent further legislation, there won't be a second Apex project.
Okay, and committee, I got to tell you, as difficult as that one looks, the housing project that did not come through this committee, that actually may have a bigger price tag if the state is not careful. So this committee will be taking a deep dive on that. I'm hoping that Commerce looks at it also. Committee, any other questions for Eddie? Sure. Senator Klemp.
Thank you. Just for clarification, in 2024, you mentioned most of the funds on the Apex were not associated with Panasonic. Is that fair?
Yeah. None of the impact in fiscal 2024 was associated with
You said
Panasonic.
it was about half a year.
Yeah, that's so the effective corporate rate for most corporations in the state had been 7.0%. As a part of the Apex bill, any Apex agreements that were entered into and kind of came to fruition resulted in a 0.5% rate reduction. So that dropped to 6.5%.
Is it fair to assume that in 2025 it goes up to around 60 million?
Yeah, it's somewhere in that vicinity. But these are it's not explicit in these numbers though. But yeah, it would be in that ballpark.
And does it, in 2026, does it grow even further? Is that kind of flatten out?
You would kind of expect modest growth with it in conjunction with the economy, but you wouldn't expect that same sort of doubling phenomenon.
Okay.
Yep.
So Eddie, if I may, I think it would help the committee to break that out for us in a future.
Okay.
You could just email it to the committee, or maybe there'd be enough questions, committee, that we'll have Eddie in front of us again. Okay. Any other questions? Seeing none?
All right. I may not get to the tax facts document at this point, just in light of where we are, but the next document that you have is our State General Fund receipts memo for December. For those of you who are new to the legislature, the consensus estimating group not only does the estimates twice a year, but then we break those estimates up into kind of 12 individual pieces in terms of what we expect to receive on a monthly basis. I do want to give a big caveat that there is a lot less precision associated with that because there can be just individual taxpayer timing factors that flow into that. And so we always try to caution policymakers to not read too much into the monthly receipts. And also, just as a group, to be very transparent, we don't invest as much time into cutting the estimates up into those 12 little pieces as we do in arriving at the final fiscal year numbers. But that being said, this document, which is a one-page memo and a one-page table, represents the group's expectations through the month of December, and also then what the actuals are through the month of December. And so this is fiscal year to date, not December specific information, but you can see that the fiscal year to date through December, which is in essence the first half of the fiscal year, we in total are $65 million ahead of the revenue estimates to date. 41 million of that is tax receipts, and more than 100% of that 41 million comes on the income tax side, with corporation income taxes being 39.5 million ahead, individual income taxes being 6.2 million ahead. For those of you who are new to state taxes, December is a really important month for corporation income taxes because it includes the final estimated payment for the calendar year for corporations. That estimated payment for individuals is in the month of January. And so in this sort of circumstance, the 39.5 million for corporation being ahead is more informative than the 16.2 million for individual being ahead. But by the end of January, the individual number might be a bit more informative. Retail sales and compensating use, those are numbers that, of course, tend to be relatively stable month to month. That being said, of course, the holiday season is the biggest shopping season. And so you do see a bump up in those in both December receipts and January receipts. December receipts reflecting transactions in the month of November, January receipts reflecting transactions in the month of December, before they then drop off in a meaningful way in the month of February, as that reflects January transactions, which most retailers would tell you that January tends to be their slowest month, and especially in a year like this, where much of the eastern portion of the state was kind of closed down for several days on end, we expect, in this sort of circumstance, a very modest February. So that's something that when you see the February version of this report, if sales tax receipts are particularly weak that month, that keep in mind, and we will probably mention this in the memo, that winter storms in the state of Kansas in the month of January may have adversely impacted February collections by the state for sales and use tax receipts. I do also just want to highlight in this case that our non-tax receipts are exceeding the estimate by $23.6 million. The bulk of that is in interest, and that's actually attributable to kind of a one-time blip, I guess I would describe it as. The Budget Stabilization Fund is entitled to retain its own interest. Historically, it does that through what is referred to as average daily balance, where it is kind of pooled together with all of the other funds that are allowed to retain their own interest. And then it actually routes through the state general fund and then transfers back out to those funds. Last year, the legislature made a change to the way Budget Stabilization Fund monies can be invested, allowing them to be invested in slightly longer-term U.S. Treasury documents as opposed to just that average daily balance fund. And so there was kind of some accounting. We weren't capturing it very effectively on the accounting side is maybe the best way to describe it. So there's a one-time kind of blip in that in the month of December. We don't anticipate that $23.6 million to be something that grows in a meaningful way prospectively. So with that, I would happily stand for whatever questions anyone might have on receipts through the month of December, and then depending upon that, decide whether or not it's worth trying to jump into tax facts today or not.
Yeah, Eddie, I don't think we're going to be able to jump into that today. We are almost out of time, committee. Senator Schallenberger.
Thank you very much, Madam Chairman. The highway fund is not a state general fund.
Right.
So none of the revenue that goes into the highway fund are shown here, even though taxpayers are paying it. Is that correct?
Right. Yeah. This does not capture that highway fund. If we had time to get to tax facts today, you would see some of the non-SGF revenues. But the only thing that does show up here is that, of course, as of January 1, 18% of the state's sales and compensating use tax goes into the highway fund. Prior to that, it had been 17%.
That transfer is not reflected here.
Right.
Directly into that kind of
Off books as it relates to the general fund.
can we get that? Just all the off-book stuff that,
Yeah, within tax facts, there's actually, it is table 4 within tax facts. It details the allocation of funds total state revenue, and it doesn't do it in detail, but it does it in terms of general fund versus everything else. The highway funds are the bulk of everything else, but we can provide more detail.
thank you. I'll look there. Thank you very much.
No, that would be great. I'm going to ask the committee that you look at the tax facts offline, and then you can bring any committees, any questions, we'll bring it up another day. We won't go over it completely with the committee, because we do have some very important information. We're going to be going over all of the exemptions, the sales tax, property tax. We're going to take a look at taxes, you guys. We have to have a good understanding of where we are now in order to know where to go for the state of Kansas. So you will be drinking from a fire hose, as the term is used. Committee, I would also draw your attention to the rules of the committee and then the rules for conferees. If you would also read those in your off time, that would be great. And if you have any questions, let me know. Senator Peck.
Thank you, Madam Chairman. Briefly, Mr. Pinner, you said something at the very outset that raised a question in my mind. If I heard you right, you said that Craig, Consensus Revenue Estimating Group, more looks, I'm going to use the work terminology, at an annual and then not so much focus on each month. So whenever we exceed or miss the monthly estimate, I understood you to say that not to read too much into that, but we see media reports and press releases and how well the state's doing because we exceeded estimates or we missed estimates so much. So help me understand that briefly.
Yeah, the statute itself provides for annual estimates to be made, and accordingly, the group invests most of its time in making annual estimates for the state's fiscal years. As a matter of transparency and tracking and hopefully some utility, we then do chop those up into 12 monthly estimates. Whether or not those are useful for people is, of course, up to you all. But yeah, I would caution that those monthly estimates they're not as valuable, and they should not retain as much weight in your minds as policymakers as the annual estimates that we update twice a year. That being said, they can be very useful, especially if month after month after month after month, you see a tax source trending in the same direction. That's probably a good indicator that the next time the group convenes, we're going to revise that tax source in that direction. Personally, as an estimator, our preference obviously would be for the margin of error to be 0 on everything. But to the extent that we can't have that, it would be better in our minds if they bounced back and forth a little bit, that as opposed to, so for instance, the November monthly receipt report showed us being behind, and now the December one shows us being ahead. If we're going to be off, in our minds, that's actually a good thing for us to be off in kind of differing fashions, because it kind of indicates that as we maybe move towards those April estimates, hopefully the estimates will kind of coalesce towards being as close to correct as possible.
Thank you. Committee, we are out of time. Is there any other business to be brought before us? Seeing none. Eddie, I want to thank you for the presentation and your work, and we're adjourned.